What's up, money growers? Jacob back here with another video coming to you guys today about something that's important because I asked you guys if you wanted this kind of video and many of you said yes. So part of what we do here on the channel is help people grow their money, and I hope you are growing your money today and every day. Now this one's going to be particularly in the realm of credit and talking about credit as it pertains to getting a mortgage. This was the question I asked. Like 84% of you said yes, you want to interview with someone who's from the mortgage industry who can shed some light on how to get your credit prepared. So guys, today I'm going to introduce Amber to the channel. Amber, go ahead and say hi.
Hello, money growers. How are you? I like that intro. It's very good.
I just trial and error. I came up with it, you know.
I like it.
So for guys, those of you who don't know, I live here in Las Vegas, Nevada. This is where I live. This is where Amber lives. And Amber has been in the mortgage industry for how many years?
20.
Jeez.
It makes me old, huh?
Jeez. Yeah, this redhead has been in the mortgage industry for 20 years. And on my other channel, I've sent numerous people to work with her looking to buy a home here in the Vegas area. And one of the big things that she does, I mean, that comes into play a lot in your line of work, is people will come to you and sometimes they have credit issues, right?
Yep.
Yeah. So
I love helping with credit issues. It's one of my things.
So in the last 20 years, she's been helping people with plenty of credit issues. You guys are licensed. How many states you guys licensed to practice? Her company she has here, your office. Which states you licensed?
So I'm licensed in as far as my office is licensed in California, Arizona, Nevada, obviously, Utah, Idaho, Montana, and we're working on Oklahoma, Washington, and Oregon right now.
Yeah, so if you're buying a home in any of those states, she can help you. Okay, I'll put her contact info down below or on the screen here, and you guys can reach out to her.
Thank you.
Of course, she knows her stuff. Because last year, how much in money did you say? How many millions of dollars in mortgages?
Last year, I closed $165 million. Just a little bit.
And you were, in terms of volume, what were you? Top 400 in the country for mortgage lenders?
Scotsman Guide had me ranked at 364.
Jeez,
and that's based on volume, so amount of loans closed.
Yeah, just the amount of loans she closed. She was 364 in the nation. So she's very nice, very sweet, but she works like all hell. So that's why I brought her on here to talk about this, because she knows her stuff. So we got some questions that were submitted by a handful of people on here. So Tamika submitted some questions.
Tamika had some good questions. Thanks, Tamika.
Yeah, Tamika submitted several here that were pretty good. So she did. And then we're also just going to talk about other common things that Amber sees when it comes to people who come to her for credit issues. So, as far as the questions, what was the first one here that you wanted to go ahead and tackle?
Well, Tamika asked, what is the minimum best score to have to strive for the best rates? That's a great question. Mm-hmm. So the best score you want to strive for is a 740 or above. So a lot of times people will say, well, I have a better rate at 800. It's actually 740 or above is the same interest rate. And this is on like a conventional loan that we're talking about. 740 or above is what you're going to want to strive for.
So whether it's 740 or 820 doesn't make a difference.
It's the same rate.
So
yeah.
Don't fight over that last few points. Don't
kill yourself. It takes a lot of years to get up into the 800s, and if you've done it, great job. You're doing great, but don't kill yourself on it. 740 is going to get you the best rate that's out there. Okay.
And what was the next one that I think also came from her?
Yeah, she said, what is the best type of mortgage? The best type of mortgage out there is, usually when you're looking at mortgages, you're looking at FHA, VA, and conventional, right? So a veteran is the best mortgage, but you have to be a veteran to do it. If you're looking beyond a VA loan, you're going to want to look at a conventional loan. Conventional gives you incentives like better rates, better mortgage insurance if you have higher FICO scores. So if you're looking at your credit scores and you're trying to make things better, you're going to want to do a conventional loan because they're going to give you a better interest rate based on your good credit scores, and their mortgage insurance is going to be a lot lower based on what your FICO scores are. And plus, one of the benefits to conventional over like an FHA loan is conventional, after you have 20% equity in your house, you can drop mortgage insurance. So let's say you buy a house, you put down 5% on the house, or you put down 3 or 5% down, and you're going to have mortgage insurance on that. On an FHA loan, that mortgage insurance lasts for the life of the loan. On a conventional loan, once you have 20% equity or 2 years in the house and 20% equity, then that mortgage insurance can be dropped off. So in the long run, a conventional loan is going to be a lot better than an FHA loan as long as you have the good credit to go with it.
Save you some money when you can drop that PMI.
Yeah, it saves a lot of money. That PMI is annoying. Let's get rid of it. Especially in a market like we've been in. Like lately, people that have houses, their equity is climbing, right? Like people are definitely equity rich right now that own houses. So when you're in a market like that and you put down a little amount of money when you bought a house, after 2 years you could just drop the mortgage insurance because you know you have 20% equity.
Or more.
Or you probably have more.
Especially if you bought in the last few years.
What happened in the last couple years, yeah.
Yeah. So what was the next one? I think this also came from Tamika.
Yes. What should realistic expectations be regarding the process? Tamika, great questions. So realistic expectations when you're in the buying process right now, it's competitive out there. So like once you come to me, and what I'll do is I'll send you over a link. We'll have you fill out an application so that I have all your information so that I can get you qualified. So what that's going to entail is I'm going to pull your credit. I'm going to look at your debt ratio. We're going to look at your history of employment. And we're going to see how much you qualify for. Then it's a matter of getting me all the paperwork, because right now in this current market, it's speed. You want to be able to move fast because you're having to compete. And really, and this is in any state, it looks like the whole United States is kind of going through the same thing with this competitive market out there and lack of inventory. So if you can get all the paperwork to me or whatever loan officer you're using, hopefully that's me, but if you can get all the paperwork in advance so that approval process can happen through underwriting, then that's going to give you more leverage when you're out there fighting for a house. Because like when you go to write an offer, the listing agent usually will pick up the phone and call me if they're looking to accept it, to make sure that you look good and that you're on track with everything. And if I can talk you up and say, you know what, they look great, they get me everything I need right when they ask, and I've already have them through underwriting, that's how beautiful these people are. Like the more I can brag about you, the more ability, the higher ability you have to be able to get into your house. Or into that house.
Right, into the house you're looking for.
Mm-hmm.
Because, yes, it is very competitive right now. There's only so many homes, and there's hedge funds buying them up. And
I
people,
know. We should do a video on that, huh?
Especially here in Las Vegas, lots of people who are selling, cashing out of bigger cities like Los Angeles and buying here with cash and that kind of thing. So, you mentioned pulling credit. Now, to explain how that's different when you say you're going to like pull their credit for a loan, and like what people are going to, because they're going to see on their credit report that, yes, you got a hard inquiry from such and such mortgage company. So, but you said that's not what the bank is going to be seeing, right?
Yeah, there's a pretty common misconception out there. So what you're seeing when you pull your credit as a consumer is a consumer credit report. So it's a different version than what I pull on the mortgage side. It's also a different version than what the car companies pull, what the credit card companies pull. They're all different versions. So like when you're looking at your credit on the consumer side and you had inquiry on there, it's going to show that it reduces your points, right? On my mortgage side, we have 3 pulls before it would reduce points. So it's different than what you guys would see. So sometimes people are like, oh, you pull my credit. To be honest with you, the only reason why you have credit is to get credit extended to you. But on our side, which is the side that's going to give you the money, we're not going to hit your points just by pulling it one time. It seems like it would be kind of unfair, wouldn't it?
Right.
To like hit somebody's credit. When we're trying to extend credit, then your scores go down. So you're only seeing that on the consumer side. So you have to remember there's different versions of credit that are going to weigh your scores differently. I wish they were all the same. It would be so much easier.
Right.
If everything was the same, but there's different versions.
Right, because people might look and they might see they got a hard inquiry on Experian, Equifax, and TransUnion for this, to go looking for a house.
And they will, yeah.
Right. But you're saying that's not going to hurt them when it comes to actually qualifying for the mortgage.
No, because we don't hit a lot of times I'll have to rescore people, like if the scores aren't what we need it, and then I'll have them pay down a card or something like that, and we can talk about that next, to be able to boost their scores up, and then I'll rescore the credit. So the pulling the new credit doesn't affect the score. It was more just fixing the balance on the credit card. So we're going to look at those inquiries different than what you guys see on the consumer side. Okay. Different versions of credit. They got to confuse us.
No kidding. One thing credit can be is definitely confusing.
It definitely is, yeah.
Now, you mentioned people trying to get their scores up quickly. So if someone comes to you and their score is a little, say they come to you and they've got like a 640 or something. You say, okay, we need to get you like 700 plus or 740 plus ideally. I mean, what are probably the most common things you see that people come to you with credit issues? And you're like, okay, we can do this quick, we can do this quick, and we can get your score up fast.
Okay, here's the quick fixes. So the quick fixes are your credit card balances. A lot of times people think when you get a credit card, let's say they give you $1,000 credit limit, and a lot of people will think, oh, yay, let me go use $1,000. The credit companies, so Experian, TransUnion, and Equifax, are weighing you based on your responsibility of credit. So if you have $1,000 limit and you keep that balance $100 or below, so 10% is a good rule, then they're going to weigh you heavily because 90% of your availability you still have available to you.
Basically, like you're showing them you don't need that much money.
Yeah, so I've seen, and I've done this with my own adults. I don't want to age myself, but adult children. I've seen like young people just starting credit, just barely start and have a 720 FICO score right off the bat, because all you have to do is have really one credit card to be able to help your scores boost up. And the credit card, which is considered revolving credit, is what weighs your scores more than anything. You can really move your scores up and down just based off what those balances are.
Yeah.
So the quick way to fix it is to just pay down that card.
Now, and one thing when it comes to mortgages, because we'll talk about here, like on this channel, other channels, we'll talk about how like your credit score is different than from your credit profile. Because sometimes people could have a really high credit score, but they've got a thin credit profile. So if they were to get like if they were trying to get like, a personal loan from a bank or something, they would not be able to do that because their profile is thin. But for mortgages, it's just the credit score is all that really matters.
Not necessarily. So conventional, that's the difference between conventional and FHA. So FHA, they allow thin credit.
Right.
Or you can have thin, so you don't have to have a super long history on your credit. So if somebody just has a 6-month history, you're fine doing an FHA loan. And FHA is a beautiful loan because they have low FICO scores. But the problem with FHA is they have limits, so you have to make sure to stay underneath their limits as far as how much you can purchase in a house.
Right.
So if you have thin credit, a lot of times FHA is the way. Sometimes conventional will still allow you to go through with thin credit profile as long as you have like assets and other things that are strengthening. So what we have to do is take your information that you fill out on the application and run it through their automated systems, and then it'll accept you or won't accept you.
So even
in some cases.
So say like a younger person who maybe has had a job for several years, they have money saved up, but they do have a thin credit profile, they still have that option.
Yeah. Okay. A lot of times we'll go FHA. That's why they consider FHA a lot of times the first time home buyer, because it's, you don't have to have a long history on your profile for that.
Right. So whether you have thin profile or a fat profile, either one can be good.
Yep.
Okay. So you have options for both. Now, so you say biggest quick fix is really just paying off balances and making sure that, when that billing cycle's over, your utilization is, it's really just best to pay the card off. But
no, leave a small balance on there. Because if you pay it off, a lot of times they don't even weigh your credit. If you leave a little balance on there, then they have to report it every month. When you pay it completely off, a lot of times they don't even report it.
I'm smiling because that's like in the online world, you'll see people say just pay it off, don't carry a balance. You know, pay. 1 to 3%, 1 to 7%. You'll hear different strategies, different theories on it. So
everything on credit is always so misconstrued, right?
Well, yeah, a lot of stuff in credit, so it's not necessarily a solid black and white answer.
It's not, because there's so many different versions of it too, though.
Right.
So every version's going to be different. But I have what's called like a what if. It's called a what if scenario. So if I pull your credit and say the scores are a little bit off, I can go into the scenario builder and put in there, okay, what if you pay your card down to 10%, or what if you pay it off? And I can send you both of them. And most of the time it's going to be a lot better just to pay it down.
So outside of, making sure your balances are, you're not running up a high balance in your credit card, is there anything else that you see as a usual quick fix when people come to you with credit issues trying to get a mortgage?
Yeah, one quick fix is a lot of times if you're going to see your credit scores go lower, it's because maybe somebody put something in collections, right? Or a late payment hit. A late payment's crazy because one late payment can be
80, 100
it's
points.
Crazy. It's not even right. One mistake. I've seen people that have had 15 years of good credit and one late hits and it's 100 points.
Yeah.
I'm like, so we're just negating the whole 15 years that's
the decade
before that?
The decade and a half of being responsible.
For one late that was probably a misunderstanding somewhere. But
Right.
anyway, so make sure that you're watching your lates. Lates can't hit unless it's 30 days late. So if you end up paying that card and it clears at day 29, and they report you 30 days, then definitely call them back and say, hey, from what I can see, this was 29 days late, and you reported me 30 days late. So try to see if you can fight it that way. Another thing is collections. So let's say you go to the doctor. A lot of times when you go to the doctor, especially if you get put in the hospital, you're going to be billed by so many people, you don't even know who these people are, right? Like if they send it out to labs and you're like, I don't even know who I'm paying right now.
The lab, the hospital, the doctor, all separate bills.
Yeah. So then you see that something hits your credit and it says medical. Some medical collection companies, because of that reason, because some of their billing can be a little bit messed up. So some of those medical collection companies are forgiving. So if you call them and say, I didn't know I had this, I didn't even know where it came from, I'm willing to pay you if you will delete it from my credit. A lot of times they will delete it from your credit.
Okay.
But you have to ask the question. And then they'll send you a deletion letter, and you can even send it in yourself instead of trusting them to do it.
Okay.
So, or if you're in the process of a mortgage, I can send it in for you to do it.
Oh, so you can send the deletion letter for them.
Yeah, that's what's called a rescore. So if you get a deletion letter on something that's on your credit, it says, we're deleting this. Thank you for paying this payment of blah, blah, blah. We reported it by mistake and are now sending it into Experian, Equifax, and TransUnion. I can then send that letter into the bureaus for you to get them to remove it, and then it'll allow me to run a new credit without that collection on there.
Oh, okay. That's cool. So you're able to actually, that's cool that as on their behalf, you're able to submit it for them.
Yeah.
Now, so you're saying, getting a late payment removed, or excuse me, for like a collection, saying, hey, if I pay this off, will you remove it type of thing. For a late payment, you typically just have your clients say, hey, send an email to the CEO of the company or contact one of their reps and see if they can,
Yeah, late payments are harder. So I'd say avoid those at all costs. I mean, but it definitely never hurts to try. Yeah, calling the CEO of a company is an absolute fabulous idea if you can get a hold of them.
Well, you're probably able to call, but you can try to find an email. It'd probably be better, and then get to like an assistant or something. That's what people will do, or they'll say, can they make an exception for this one late payment I've had, or that kind of thing.
You know what? Honestly, the squeaky wheel gets the grease and those kind of things. If you don't call, they're going to just keep it on there. If you don't try to reach out, if you're doing multiple things to try to advocate for yourself on your credit, then you're probably going to get somewhere with it, I would say.
Right.
So
I want to bring up another one that comes up quite a bit on my channel. Because I've done different topics or different videos on this subject. And that is of people becoming an authorized user or buying a trade line or something like that to try to increase their score so they can get a better mortgage rate. So, I mean, what experience do you have with clients doing that? Is there times you recommended they do that to try to just bump up their score? Because once they bump up to whatever score, 740 plus, I mean, they can just come off the trade line after they qualify for that best mortgage rate, and that's all they needed, right?
I don't know if I refer them to do that. What I'll do a lot of times is say if it's somebody that's young and that has, credit that they might need help with, to see if your mom or dad can add you to one of their cards. I don't know if I refer somebody to pay for that service as much.
Yeah, well, there's definitely services that do that.
But there's definitely services out there that do that.
Yeah,
they probably just don't let me know when they're doing it.
Yeah, well, I've reviewed at least one here on the channel so far, and I'm going to review others. But it's definitely a niche within the world of credit that
for sure.
Some people really look to because it can boost your score. There's never a guarantee.
Yeah.
But it can boost your score. So sometimes you've had that where it's a younger person say, hey, see if your parent can put you on as an authorized user.
And that's the same thing.
Right.
That's the same thing because you're just not paying for it. They're putting your name on their credit card to boost your scores because basically as a young person you're going to get then credit for all the years that they had that card, which is kind of cool.
Yeah, you get all those all that age, you get if they have a perfect payment history, you get all their payment history and that kind of thing. So I mean, so you would say becoming an authorized user is kind of a unique situation when someone comes to you with a credit problem.
Yeah, it's more of a unique situation.
In that regard.
Yeah, most of the time there's other ways if you have your own credit to fix it, but I mean that's definitely something to look at.
Okay. And then what was What was Tamika's last question?
Tamika said, what are 3 most important things to do when starting the home buying process? Tamika, you're asking great questions. I love them.
She's on a roll.
Yes.
Good job, Tamika.
Yes, great job, Tamika. So I would say the 3 most important things to do when starting a home buying process is you're going to have money, right? Down payment. So definitely start your saving process, or to know where your down payment's coming from. There are things that are out there that are grants, but with the market going so crazy right now with interest rates and housing, the housing's kind of going crazy. They put those grants a lot of times on hold. So and right now, because the market's so competitive, you always have to have closing costs, and sometimes you have to pay over appraised value too. So definitely have your savings plan going. If you don't know what that is, then I can always talk to you and kind of let you know, here's what you're going to need to have saved, and try to work things out, even if you have to get a gift from family or take from a 401k, or a lot of times people are doing that too, taking from 401k to buy a house. So assets is an important thing to look at. Your credit scores, which we already kind of covered. When you're doing like a conventional loan, the higher score is going to mean better rate. VA loans and FHA loans, 640 or above is pretty much the same rate. So VA and FHA are a little bit more forgiving with that. So definitely credit scores, and then time on the job too. So we're always going to make sure that you have 2 years in the same line of work. So that's something to definitely look at as well. I know we don't talk about that as much.
Well, yeah, so if you're looking to quit your job, but you also want to buy a home, it's like...
Don't do it.
Yeah, it's like, hang on for a minute. Tough it out for a little longer.
You're going to need a job.
Yeah, tough it out for a little longer. Don't switch companies yet, kind of thing.
Yeah, definitely.
So then one of the ones you mentioned, though, I want to talk about here, because, I've talked about this in the channel before, stuff particularly for veterans, and a lot of the content I've done is Navy Federal, which is very much a veteran active duty and also veteran-centric credit union. So one of the questions we had here came from Solid, and he asked about what?
He said, best and quickest ways to build from the ground up after identity theft or other such issue. Going through Navy Federal as a veteran or active duty. So
we have overcoming identity theft, and then if you want to go through Navy Federal to get a mortgage.
Yeah, well, I can't answer about Navy Federal because that's not where I work. But
but you've done them through. But you've had people go. But you work with them, right?
Well, a lot of times if people can't get their loans through Navy Federal, then they'll come to me to do it. So I'll do stuff like that. But so here's the thing about the credit with veterans. So identity theft's a different issue. If you had some identity theft, then I would say it's reestablishing credit. So you're going to want to be able to get like a secured card or something so that you can have a credit history that's good, that's showing after that identity theft happened. Because once that hit, it's going to take them some time to remove it. And then you have to reestablish and give the bureau something that's good to look at to start building your scores from there. Does that make sense?
Yeah.
But the other thing I want to talk about with veterans is a VA loan's kind of a cool thing, and this isn't talked about a lot. So, for example, I had a veteran that he was in the military overseas, and there was an explosion that came in, and he was thrown from the top of an aircraft. Jeez. Not why it was in the air, it was on the ground. I think he was fixing it or something. But basically because of that, he then had to go to get surgery on his back, and then the person that was doing the surgery made a mistake and he was paralyzed from the neck down. I know this is a tragic story, but this is a real loan that I did.
Right. But it has a good ending though.
It does have a good ending. So it took the military several months to be able to investigate the situation and to start paying him the disability because he could no longer work anymore, right? So he wasn't making an income.
Right.
During that time of the several months, if you don't have income coming in, it's very hard to make your monthly payments and your credit kind of goes to crap.
Right.
So he had lower credit scores. All of it was caused by what happened in the military. There's ways that, and I've done this for several people, that you can still get a loan if that's the case. So if something that happened within the military is the cause for your credit problems, then you can go for an exception to get a loan, even though your scores are way beneath what a lender would allow. So as a veteran, you have different options out there to get into a house. I'm not saying it's an easy process. It's something that we have to kind of go through together and fight a little bit and advocate for you, but you can get it through. So if you've had things happen like that have been something that you weren't expected, and it had to do with military, then let's talk about it and let's try to get you through on one of those exception bases.
And in that particular situation, do you remember how long it took from when they first contacted you to when you were finally able to get?
I think it took about 3 months to be able to get it through, to be able to get everything through and finally get it approved. And it was definitely a cheerleading moment when it happened. Yeah. And that was the most dramatic. I've had other people that have, had situations that have happened within the military, and that it caused things to, a lot of things can happen when you're overseas and you're doing different things like that. So we've had to fight for them too. That was probably the most dramatic that I'm telling you the story on. But
Amber grew up in a military family.
I did.
So that's more near and dear to her heart when it comes to the veterans and that kind of thing. So, I mean, in that situation though, was it just the big hassle was trying to get in touch with the VA and sort things out, or was it with?
No, it wasn't necessarily the VA. It's you're dealing with underwriters. So if an underwriter's, when an underwriter signs off on a file, they're going to put their name on that file. So in order to put their name on that file, they have to have things documented just so and prove that the credit, his situation and everything on the credit was because of that. So there's a lot of investigation that goes into it. I think that's the biggest part.
Right. It's not a straightforward situation, so it's going to take way more like individual effort.
Plus on our side and on the veteran side too. Yeah. To be able to get it through, because the veteran's going to have to pull paperwork. I mean, we can't ask for things like, that would violate HIPAA in any way. But we do need to have a lot of letters and explanations, and then they have to coincide with what's on the credit and stuff.
So okay. So as far as anything else you want to say about so you're saying that for lots of veterans, that VA loan, they're more forgiving on the credit side.
They are. You can go down to a 540 FICO score. At least at Guild where I work, you can go down to a 540 FICO score, still get 100% financing. Most companies have overlays where they'll require that you have a certain FICO score to get a loan. VA doesn't really give minimum FICO scores, but you have to ask the lender what their overlays are on that stuff. But yeah, VA is definitely very forgiving when it comes to credit. You can explain things. I mean, VA, thankfully, they've taken care of their veterans in the way that they give mortgages, because there is no other loan like it. It's 100% financing. You don't have any down payment. Well, obviously, it's 100% financing. Their rates are better than most other rates that are out there, and you don't have any mortgage insurance. If you're disabled, you don't even have, there's what's called a VA funding fee, but if you have disability through the military, that's waived too. So there's a lot of benefits to a VA loan.
What is the percent of disability you have to have?
I believe it's even just 10%. So
really?
Between 10 to 100%, you can be waived on that.
Oh, okay.
Pretty cool.
Yeah, that's pretty amazing. Amber's done lots and lots of VA loans in the 20 years you've been doing this.
I know, that's making me sound old.
Anywho, so anything else that you think, we got some good questions that people asked, and some questions, that I knew we were going to be talking about, just common things you've seen when it comes to the world of credit for a mortgage. I mean, anything else particularly credit related if someone just comes to you? I mean, you probably had some people come to you with maybe a good job, with some money saved, and the credit is just totally shot.
Oh, yeah, for sure. And sometimes, depending on the level of credit, sometimes we'll just try to see, because you can do loans where it requires lower credit scores. So sometimes we'll just see, because if it's too much effort and they just don't want to go after it, then we'll try to do those. And on those, you just have to make sure that you have a clean history for 12 months and you don't have anything disputed on your credit. So sometimes people will try to go in and dispute things. Have you seen that, where you can dispute items on the credit and stuff like that?
Do it on your own.
Yeah.
Oh, yeah.
So that kind of causes a little bit of havoc when you're doing a loan, because when you dispute an item on your credit, you're falsely bringing your scores up. So when you go to get a mortgage, and let's say we're doing like an FHA or a VA, they're going to make us take those disputes off your credit. And then we're going to get your real scores. So don't dispute if you're going to go for a mortgage. Wait until after those disputes are done, and then start the mortgage. Make sense?
Yeah, I didn't know that.
Yeah.
So
Yeah.
they think it's falsely raising your credit to
It
just,
does though. If you dispute it, it'll take that trade line off your credit in certain ways. Like some things don't. Like if you're disputing an inquiry or something, that's not going to make any
okay.
difference. But like if you take a collection and you put in a dispute, then it removes it from that bureau's credit scoring system. So it's a sneaky way to get your scores up, and a lot of credit companies will do that. But they're not like doing loans either, so they don't realize it's going to mess you up when you're doing a loan.
Yeah, it's not going to impact them.
Yeah.
So
yeah.
Now, when it comes to people who've come to you with bad credit situations, I mean, do you have an example or fee you've seen where it's like, okay, it's going to take us 6 months to like try to fix all this before we can get you like a better rate? Because you're saying some people they don't want to go through the effort of it, so they're happy they're fine to just pay a higher rate on the mortgage.
Yeah, some people will.
And you've had some. I mean,
some people though, their credit might be low enough where you can't even get you can't get one of those the loans that are for people with lower credit scores.
Jeez.
So if you've been consistently late on things all the time and you have a lot of stuff happening recently, that's when it becomes hard. So then we'll have to work up some type of game plan. And I've seen people. I've seen people get it done in 3 months. I've seen people get it done in 18 months. It just is kind of your level of what you have time for and what you're willing to do on it. It's kind of, a personal thing.
So but if they got any credit issues and they're thinking about buying a home, I mean, it's better to come to you sooner than later, because you said it could be that situation. Okay, yeah, in 3 months we can have you good to go.
Yeah.
But it could be one where it's like, look, this is going to take 18 months to clean this up. So, start working on this now, start saving money, and then in a year and a half, we can get you the best rate on a home.
It's good to get the game plan.
Right.
Like work up that game plan so we can see, because it could be credit, it could be income, it could be assets. We're going to look at all of them. So then just to get a game plan on, here's what it looks like you're going to need for credit, here's what to do, here's what you're going to need for down payment, here's what to do, Yeah,
then you can structure.
Or your job, depending on what your job is, there might be different things to do. So.
Yeah, she's done this like a few thousand times. So there's probably not a situation she hasn't seen before. This is why I asked Amber to come on.
I get excited when there is. So if you have a situation that is hard.
Something unique. Where it's like, I've been to 27 other people. They've all told me it's impossible. Come to her. She'll help you out. So is there anything else you want to mention about, the mortgages, anything for the general audience or anything? I mean, we've talked a lot about the credit related side of things. I mean, we've talked also about, other things you're going to need as well. I mean, is there anything we missed out that you think would be valuable for everyone to cover?
On the credit side of things?
We covered a lot of credit. Was there something we missed on credit?
I don't think we missed anything on credit. We got the lates, we got the bills.
Yeah, I think you hit that 740 plus. That's the best. That's the big.
You're doing good. Yes, like I said, don't try to hit for the stars at 800. It takes years to get there.
Yeah.
So if you're doing, even if you get to 720, you're doing great. Let's get you going. So.
Sweet.
Yeah.
Well, hey, thank you for coming on.
Yeah, thanks for having me. It's always good to always good to hang with Jacob for a while.
Yeah, Amber's I've known Amber for years, and she's pretty awesome at doing this. So, like I said, I didn't know you had 20 years experience. I thought it was like 16 or something, but 20 years, 2 decades she's been doing this. She's seen this economy go up, down, up, down.
I've seen it all. So if you have any questions on the market too, just let me know. Okay.
Yeah, she's obviously.
I'll tell you what to look for.
Yeah, when another mortgage companies are going out of business, you're able to make through the whole thing, and obviously, 100+ million every year, whatever. She's done it for houses and people all over the country. So, hey, whether you're civilian, whether you're military, whether you're employee, self-employed, she can help you. That's your go-to gal.
Oh, thank you.
So I'll put the link, any contact information for her down below. But I appreciate you guys answering these questions. Tamika, again, you were awesome.
Yes, great questions.
Tamika was like, she put it all together. So I hope you guys really enjoyed this video. I did what I could. It's a little bit different than what I normally do, but I thought you guys might be interested in this. I asked. Overwhelmingly, people said yes, they were. So I'm really hoping there was some value in this video. If you have any other questions, ask them down below. I'll do what I can to help you out. You can have Amber chime in as well down in the comments section, and she'll do what she can for you guys. So if you need help with this kind of stuff, this is your go-to gal. One more time, you're operating in how many states your team operating now?
We're operating in, you want me to say the states?
Go for it, yeah.
Okay, so we're operating in Nevada. Obviously, that's where I am right now. California, Arizona, Idaho, Montana,
Utah.
I'm like, I know I'm missing one. And we're getting licensed in Oklahoma. I've had a lot of people ask me about Oklahoma. There must be a lot of interest in Oklahoma for investing. Is what I'm considering.
Cheap to live.
It looks like it, yeah. So Oklahoma, I'll have that pretty soon, and then Washington and Oregon is what we're working on too.
So a whole bunch of the states out west. She's almost gonna have the entire west covered. So if you guys are in any of those states and you need help, you want to get a mortgage, she can help you. Okay. So hey, thanks again, Amber.
No, thank you. Thanks for having me on your channel.
All right, guys. Thanks for watching. Thanks for being so awesome. And until next time, keep growing your money.